Okay, so good morning, friends. Yesterday we started with new chapter. What was the name of the chapter? Okay, charging section of house property. Section 22, not 24. 22. First condition. What is the first condition? There should be a house property. Number two, the assessee should be the owner of that house property. Number three, the house property shall not be used for the purpose of own business or profession. Yes or no? Okay, three conditions we discussed yesterday. Number one, house property. This discussion is over. Assessee is the owner. This is also done. And the use of the house property shall not be for the purpose of own business or profession. Yes or no? Now, see, small discussion we were having about the use of the house property. How the house property is being used. How the house property is being used. If your house property is self-acquired by you, self-occupied by you, so that property is known as SOP. Okay. And if the house property is given by you to someone, then it is let out. Okay. Let out property can earn rent. Does it have rent earning capacity? And that rent earning capacity is being exploited and rent is also earned. Hence, it will be taxable. Yes or no? What about the self-occupied property? Self-occupied property also has rent earning capacity. But since that rent earning capacity is not being exploited to earn rent, hence the self-occupied properties are exempt. Self-occupied properties are, how many self-occupied properties are exempt? All or any two? Any two at the option of the assessee. At the option of the, and all the other SOPs. All the other for which exemption is not claimed. For which exemption is, will be deemed to be let out properties. Will be deemed to be. Okay. And the annual value, meaning the rent earning capacity of such properties, even if not exploited, to earn rent, still it will be taxable. Yes or no? We had a discussion about this yesterday. Okay. Now few small things to keep in mind. Okay. Pay attention. If you are an assessee, you are the owner of a house property. Can you let out the property? Can you let out the property? Now, if you are letting out the property, meaning that you are exploiting the rent earning capacity and earning the rent. So tell me, will that rent be taxable? Under which head? House property. Usually it is taxable under the head house property. Okay, no? See, if it is let out, and letting out of such property is supplementary or incidental to business of the assessee. Usually what happens, whenever you let out the property, rental income will come and that rental income will be charged under this head. Okay, no? Usually the rental income of the house property is taxable under the head house property. But one exception is there. Not one, one more exception is there. Okay. But wait, if I am telling you that if the business of the assessee, if the business of the assessee is there, so in that business, during the course of that business, the property is given on rent. For example, I have one big factory, very big factory, but away from city, 100, 200 kilometers away from the city. There is no nearby town also. So if I am having a huge factory over there, in that factory, will I require some employees, workers? Yes or no? So 2000 employees are required. 2000 employees and workers are required in that factory. I have set up the factory. To work in that factory, 2000 workers are required. So I will call my employees to work there. I have engaged my workers, I have engaged my employees to work there in that factory. They will come and they will work. They are ready to work. But they are asking me that, sir, we are coming so far to work in this factory, where will we stay? Because we cannot travel every day, no? Because the city is 200 kilometers away. There is no nearby town also where we can live. So, what is the facility to be here? Because if we are coming to work here, we need some place to stay also. Because if I will not provide them that space, I will not be able to run my factory because nobody is going to come to work in this factory. Getting my point? So what I did, I acquired a huge land, just nearby to my factory. And on that huge land, I constructed a township. In that township, I have constructed many houses. And in those houses, I am providing accommodation to my employees. Can I do that? Big factories which are situated, very far away, these factories have these kind of practices. Now tell me, a township is constructed. In that township, many houses are constructed. Small houses, big houses, 1 BHK, 2 BHK, okay, no? So in all those houses, I'm keeping my employees. Possible or not possible? Tell me yes or no. So if I am keeping my employees over there, will I take a small amount of rent from them? Will I take small amount of rent from them? Why? In order to, repair the premises, for the maintenance of the premises of those houses, I might take a small amount of rent from them. Yes or no? Now tell me, did I construct those houses to let out and earn the rental income or to run my business? Because if I would not have constructed those houses, yes or no, I would not have been able to run my factory, to run my business. Hello, sir. So can I say, in the course of doing my business, what did I say? In the course of doing my business, I had to take this decision to set up that township, construct these houses and give those houses to my employees so that my employees come here and I could run my business smoothly. Getting my point? And in that course, if the employees are staying there, they are giving me a small amount of rent also. Is my intention to construct those houses, give those houses on rent and exploit the rent earning capacity? Can you see I have that kind of intention? So if my intention is not to exploit the rent earning capacity of the property, so the rent which is coming from such property cannot be taxed under the head house property. That will go under the head PGBP. That will go under the head, because in the course of doing my business, I am earning that rent from my employees to whom I am giving those houses for rent. Getting my point? So can I say, if the assessee is the owner of the house property and the house property is let out, and letting out of such property is supplementary. What did I say? Supplementary or incidental to the. Supplementary or incidental means in the course of doing my business. While doing that business, this happened. If I was not doing that business, I would have never constructed the township. I would have never given the township houses to my employees. That is happening because of doing this business. Getting my point? So as a result of doing that business, in the course of my business, I am earning that supplementary income, secondary income. That is not the main income of my business, but that is happening in the course of my business only. Getting my point? So that income cannot be taxed under the head house property, because exploiting the rent earning capacity was not my intention. So that will go to which head? That will go to which head? Now tell me, if I am the owner of the house property and I have let out that property, and now please listen carefully. Letting out of the properties is the main business of the assessee. Assessee is doing a business. Now what business he is doing? Acquiring the properties, giving them on rent and earning the rental income. Yes or no? Acquiring the properties, giving those properties on rent and earning the rental income. That is my business. See, somebody might do the business of selling shoes. Somebody might do the business of manufacturing clothes. Somebody might do the business of, running a restaurant. I'm not interested in all those businesses. I'm interested in doing a business of letting out the properties. So I acquire the properties and give them on rent and on rental income. That is my business. So what is my main business? Come on, tell me. Giving the properties on rent, giving the properties on and earning the, in that case my rental income will be taxable under the head PGBP. Getting my point? In that case my rental income will be taxable under the head only if the properties are commercial properties. What did I say? Only if I'm letting the commercial properties. My business is to let out commercial properties like shops are there, godowns are there, yes or no? But if I am saying that I'm in the business of letting out which properties? Residential properties. If I'm saying that I'm in the business of letting out the residential properties, then come what may, any rental income from residential property will always be taxable under the head house property. I cannot show that income under the head PGBP. So even if I say that I am having a business of what? Giving the properties on rent. I am having the business of giving the properties on rent. It will be seen that what type of properties are being let out. If the properties which are being let out in my business, if the properties which are being let out are commercial, only then the rental income will be taxable under the head PGBP. But if the properties are residential in nature, residential properties are there, then the income will be taxable under the head house property. Got it, sir? Hello? Now tell me. Two things we saw. One, I'm letting out my property. I'm letting out my, but letting out is happening in the course of my business. Then the rental income will not be taxable under the head house property. It will be taxable under the head PGBP. Now tell me, if I'm letting out my properties and I'm doing the business only of renting the properties, then the rental income will be PGBP, provided that the properties are commercial. If the properties are residential, then even if my business is renting the property, the rent will always come to house property. Will you remember this? Will you remember? In the house property, in the PGBP head, no, I'm going to ask this thing once again. Okay, till that time, please remember. Okay, after that, if you want to forget, no problem. Okay, next one. See, now there is an assessee. He is the owner of the house property. He is the owner of the house property. Now, if that house property is given on rent to a firm, so there is one firm. To that firm, the property is given on rent. So can I say the property is actually let out? Actually let out to a firm. And fortunately, I am also a partner in that firm. Fortunately, I am also a partner in that firm. So what? Even if you are a partner in that firm, have you given that property to firm for using? Yes. But are you charging rent from that property? So definitely you are exploiting the rent earning capacity and earning the rental income. So that property will always be treated as your let out property that you cannot say that you are using in your business, in your partnership business. Yes or no? Hello? For example, if myself and Kamlesh, we both are partners. We both are, and we have one partnership firm. So for conducting the business of the partnership firm, we want what? We want an office. Okay. So Kamlesh is saying, sir, instead of taking the office on rent from somebody else, I am having one office. Hello. Let's use that office in the business of our partnership firm. And from partnership firm, I will take the rent. Is he taking the rent? Hello? Is he taking the rent for his office? Meaning that even if that property is used in his partnership business, but is he exploiting the rent earning capacity of that business? Rent earning capacity of that house property? Yes. And earning the rental income? That property will be treated as his let out property. The rental income will be taxable for him under the head house property. Hello, sir. But can you see The partnership firm is spending money. Partnership firm will be giving rent. So it will be an expenditure in the hands of partnership firm, which the partnership firm will claim as a deduction from its income under the head PGBP. So for partnership firm, what will be the tax effect? Partnership firm, it is an expense, no? Hello? So partnership firm will claim the deduction for this expense under the head PGBP. But for partner, what will be the tax effect? For partner, what will be the tax effect? Come on, tell me. Partner will say that it is my let out property. The rental income of that property will be taxable in the hands of partner under which head? House property. Yes or no? Hello? Even if the property is given on rent to his own partnership firm, the rental income will be taxable under the head house property. Will you remember this? Now what if in that same case, Kamlesh has given the property to use to the partnership firm, but he is not charging any rent. He is not charging any rent. What will happen in that case? Is he exploiting the rent earning capacity to earn the rent? No. So it will be considered as if the property is used in his own business, because partnership firm is his own business. Getting my point? So if the rent is charged, then the property will become LOP, let out property for the partner. Yes or no? But what if the rent is not charged? Then that property will not be considered under the head house property in the hands of partner, because it will be considered as if the property is used in his own business. Will you remember? Yes or no? So tell me, for the partner, rent is coming or not coming? So it will be considered as if it is used by the partner in his own business or profession, therefore not to be considered under the head in the hands of the assessee, means partner. Yes or no? But what if the rent was charged? What if the rent was charged? Then it will be taxable under the head house property in the hands of the assessee, meaning the partner. Will you remember all these things? Hello, sir. So last discussion is about what? Annual value. About the, see, what amount will be taxable under the head house property? Yesterday we saw 3 conditions. How many conditions? Number 1, there should be a assessee should be the owner of the house property, and that house property shall not be used by the assessee for his own business or, okay, if all these 3 conditions are satisfied, then bring that house property under this head. Bring that house property under this head. And now the annual value of this property will be charged. The annual value of the property will be charged. What is the meaning of annual value? Meaning of annual value is rent earning capacity of the, and how will you determine that rent earning capacity is given in section number 23. Is given in section number. So by following the provisions of section 23, we are going to compute the annual value of different types of properties. Okay? Because that annual value is supposed to be charged for each property. Getting my point? Next one. Now, once you calculate the annual value, excluding the municipal tax, excluding the, you will get net annual value. You will get, and from that you are going to get deductions under section, and only then you will get the taxable income from that house property. Yes or no? Now I am giving you few examples. You are going to tell me, okay, no? For example, Mr. Ramesh is having 3 properties. How many properties? Okay. One property is taken on rent by him. One property is taken on rent by him. Yes or no? And 2 properties are owned by him. 2 properties are. So tell me, during the previous year 25-26, how many properties he is having? 3. How many properties he is having? But can you see 3 properties are there, but he is the owner of only 2 properties? Yes or no? So out of his 3 properties, how many properties you will bring under this head? 2 properties, of which he is the, now both the properties are not used for his business or profession. Both the properties, only then these 2 properties will come under the head house properties. Yes or no? But out of these 2 properties, no, One property he was using as his office in his profession. One property he was using in his profession as his office. Tell me, will this property come under the head house property? So forget about this property. How many properties are left? House property is there. Ramesh is the owner of this property. Is Ramesh using this property? Is Ramesh using this property for his own business or profession? No. Now bring this property under the head house property. Yes or no? Now ask yourself, Ramesh, what are you doing with this property? Ramesh is saying, I have self-occupied and I and my family staying there. What will be the nature of the property? SOP. Yes or no? SOP. Now ask the question again, Ramesh, what are you doing with this property? Ramesh is saying, I'm not using this property. I'm not using this property for my residence. I have given this property to someone on rent. Let out. So once the property comes under this head, now you check that the property is SOP or LOP. Getting my point, everyone? Hello? So how many properties can come? How many properties can fall under the head of house property? One property only? Two property only? Or multiple properties? So all the properties which will come here has to satisfy those three conditions. Has to satisfy those. The property should be house property. Assessee should be the owner of that house property. And number three, that property shall not be used by the assessee for his own business or profession. Okay. Now we have brought these properties under the head. Now what will you do? You will calculate the annual value for each property. What will you do? Calculate the annual value for each property separately. Yes or no? That is known as gross annual value. What will you call it? Gross annual value. Sir, how to calculate this gross annual value and whether this gross annual value will be taxable or will not be taxable? It is given in section number 23. Hello. Now, from that gross annual value, what will be reduced? Municipal taxes which are paid will be reduced. What will you get? Net annual value. Out of that net annual value, deductions will be allowed under section 24 clause A, 24 clause B. Which deduction will be allowed? Standard deduction at the rate of 30% of NAV. That is deduction available under 24A. And what is the deduction available under 24B? Interest on housing loan. Interest on. And then you will get the taxable income from house property. For every single property, you are supposed to do the same calculation. Okay. So for all the properties, you are going to calculate which income? Taxable income. Now taxable income of all the properties, you will add all of them. You will add all of them. You will get a single amount. That is known as total of this head. That is known as total of this head. That is the taxable income of the house property head, which you will take in the calculation of your total income. Getting my point? Hello, sir. So now we'll learn that how to calculate gross annual value for different types of properties. How to calculate the gross annual value for different types of properties. Number one, can your property be let out property? Hello? Gross annual value will be calculated in this manner and that gross annual value will be taxable. Where it is written? Section 23(1). Section 23. What if you are having a property? What if you are having a property which is self-occupied property? Will you calculate the gross annual value? Why? Because the annual value of any two SOPs at the option of the assessee is exempt. Hello, sir. So can you have one SOP? Annual value exempt. Will you calculate or will you will not calculate? You will not calculate. Can you have two SOPs? Can you have two SOPs? Annual value is exempt. No need to calculate. Getting my point? Can you have three SOPs? Can you have three SOPs? Annual value of any two SOPs. Annual value of any option is given to you. You decide which properties you want. Okay, no? Annual value of any two SOPs at the option of the assessee will be exempt. What about the third SOP? its annual value will be calculated. Its annual value will be, and it will be considered as your DLOP, and its annual value will be taxable. So what is a DLOP? DLOP is SOP only. DLOP is SOP only, but you cannot claim the exemption of annual value of this property. Why? Because you have already claimed the exemption of two SOPs. Getting my point? So the SOP which is remaining, for which the annual value cannot be exempt, will fall under which section? 23(4), and its annual value will be calculated and it will be taxable. Will you remember this? Hello sir. Now tell me, now somebody will have a doubt here. Sir, is it necessary that the property which I am having can be only let out? Yes. Is it necessary that the property which I am having will be only self-occupied? Yes. But sometimes no. Sometimes what will happen? A property during the previous year is partly let out and partly self-occupied also. Possible or not possible? Partly let out and partly self-occupied, based on time also and based on area also. What did I say? Based on time also, based on area also. First of all, tell me, based on time means what? My previous year starts from? My previous year starts from which date? 1st April 2025, and my previous year will end on? So can I say this previous year is nothing but a time? Hello? This time will start from 1st April 2025, ends on 31st March. Okay, no? Now during this period, during the period of 25-26, for 9 months I have let out the property. Possible or not possible? 9 months only I have let out the property. Now after 9 months, no, tenant vacated the property and I myself self-occupied the property for my residential use for balance 3 months. Possible or not possible? So can I say during this time, during this period of 25-26, for 9 months period, the property was let out, and for 3 months period, the property is self-occupied. Partly let out, partly self-occupied, based on time. Based on. Now, if you see such type of property, will the annual value be calculated? Will it be taxable? The answer is yes. What did I say? The answer is yes. So if the property is let out, if the property is let out partly and partly it is self-occupied, based on what? Time. So as per section 23(3), the annual value of that property will also be calculated and it will also be taxable, because it is considered as good as your let out property only. Getting my point? Now can I have another case where the property is partly let out only and partly self-occupied only, but now it is based on area. Based on area means what? One property is there. In that property, 4 rooms are there. How many rooms? All rooms are identical. Identical means equal size, dimension and area. Yes or no? So can I say my property is having 4 rooms? 1, 2, 3 and 4. Out of those 4 rooms, I am using only 1 room. I am using only as a self-occupied part. But the other 3 rooms, no, I have given on rent. Possible, not possible? So can I say some area of the property I am using for myself? Hello? That is self-occupied portion of the property. Getting my point? And some area of that property I am using for myself or I am letting out. So it is partly let out, partly self-occupied, based on area. 25% will be used as SOP and 75% will be let out portion. Can I have a property having ground floor and first floor? Ground floor I have given to someone on rent. And first floor, I myself, I am staying there. Possible, not possible? So property is only one, but that property has two parts. Out of that two parts, one part is self-occupied, another part is let out. So this is what? Partly let out, partly self-occupied based on area. Now see, these cases you are going to come across. Okay. So in all such cases, how will you determine the rent earning capacity? And whether that rent earning capacity will be taxable for you or not? It is given in section number 23. Yes or no? So tell me, which is the first section which you saw? 23 subsection 1. 23 is telling you about which type of properties? Let out properties. Which properties? So, how will you calculate the annual value? Because the annual value of this property is taxable under the head house property. Getting my point? So, if the annual value of the let out property is taxable, then how will you calculate that annual value? We are going to learn that. Okay? That is given in section number. That is given in section number. Now 23 talks about, subsection 2 talks about which property? SOP. Which property? How many SOP? All SOPs or only two SOPs? Only two SOPs. And at the option of the assessee. So the assessee is given the option. You decide which two SOPs. Okay. So these two SOPs, annual value will be there. But will this annual value be charged to tax or it will be exempt? It will be exempt. So will you calculate this annual value or you will not calculate? Directly you will treat the annual value as what? Nil, because it is going to be exempt. So no need to apply the calculations. Directly take the annual value as nil. Getting my point? Now tell me, under section 23(4), which section? 23(4). So all the other SOPs, what did I say? All the other SOPs which are not covered under section 23(2), meaning that whose annual value you have not claimed, exempt. Getting my point? Can I say these properties will be treated as deemed to be let out properties? Hello, sir. The annual value of these properties will be exempt or will not be exempt? So it will be taxable. It will be. And the annual value of this property will now be calculated. Assuming as if the property is let out. So do you know how to calculate the annual value of let out property? Yes sir, yes sir. The calculation of the annual value of let out property is given in 23(1). So by applying the same provisions, you are supposed to calculate this annual value. Hello sir. So the annual value of the deemed let out properties will be calculated in the same manner, as given for let out properties under section 23(1). So if you know how to calculate the annual value of LOP, definitely the same calculations you are supposed to do for DLOP. Getting my point? The calculations are not different. Hello? So LOP, the same calculation will happen for DLOP. Are you going to do any calculations for SOP? No calculation. Why? Because the annual value is exempt. Hello sir. Will you remember this? Everything which I am talking right now, no. While solving the questions, you will be tested for all these things. I am telling you. Please be very careful. Okay. Now tell me, what about 23(3)? What about 23(3)? This talks about partly let out and partly self occupied properties based on time. Based on for some time the property is let out, for some time the property is self occupied during the previous year. Now tell me, can you give double status to the property? Please remember one thing. During one previous year, during a property can be given only one status. Property can be given. You cannot call your property LOP also in this year as well as SOP also in this year. Only one status you have to decide. That for full year, what status you are going to apply for the property. Yes or no? Now tell me, what status you are going to apply? Because for some time the property is LOP and for some time the property is SOP. Now you will have confusion. Should I call this property as my SOP, sir? Or should I call it as? I am confused. So now to avoid this confusion, I am giving this explanation. Any property will be treated as SOP. What did I say? Any property will be treated as SOP only if starting from the year till end of the year. Can I say throughout the year? Can I say throughout the year? If throughout the year the property was self-occupied for residential use, for residential, only then you can say that the property is SOP. Hello sir, first case, throughout the previous year the property was self-occupied for residential use of the assessee or any of his family members. Only then the property will be treated as SOP. First case, did you understand? Second case, throughout the previous year, what did I say? Throughout the previous year, the property is kept reserved, kept vacant. That whenever I want, I can use that property for my self-occupation. Getting my point? Hello? Starting from the year till end of the year, I am keeping the property reserved for myself. Meaning, I am keeping the property vacant. Even though I am not actually using for residence, but whenever I want, I can use that property for my residence or for my use. Yes or no? I am not deriving any financial benefit during that period from the property. Property is kept absolutely vacant or kept reserved for the assessee. Then also you can call that property SOP, self-occupied. Getting my point? For example, I am staying in Bangalore. Okay, my son is in standard 12th. All the things which I am telling are example. Don't have any son. Okay, for example, my son is in standard 12th. Science. Now we are planning that he will be giving his JEE exams and he'll go for engineering, IIT and all. So we are planning, he is very good in studies, he'll crack JEE, I know. So I'll get him admitted to IIT Bombay. IIT? So when he'll go to IIT Bombay, no, I don't want him to stay there in the hostel, eat the mess food and all. Okay, no? So by God's grace, I have enough money. What I have done, you know, I have bought one flat, I have bought one property in Mumbai, nearby IIT. Whenever my son will shift there, we also will shift there. Hello? And my son will stay with us there in that flat. That flat is not taken by me, not purchased by me with an intention to let out. Okay? I want that flat to be used by myself only. Okay? So I've kept that flat reserved for me. Kept that flat lying empty, locked. Nobody is using. Throughout the year, did I take any financial benefit from that flat? No. Even that property can be treated as SOP. So first, throughout the year used for residence. Throughout the year occupied also and used for residence also. That type of property you can call as SOP. Yes or no? Second, throughout the year kept reserved, kept vacant. As and when I want, I can use it for my residence. Still that property can be treated as SOP. Understood? Now the last case I am telling you, third case. For 9 months, I am having a property in Bangalore. For 9 months, this Bangalore property is used as SOP. Is used as. Now I am shifting to Mumbai. Why? Because I am getting a good job with high package in Mumbai. Possible, not possible? Will I take my house with me or it will stay here only? But for these 3 months now, I am keeping the house idle, vacant. I am not taking any financial benefit. So for 3 months, the property was completely vacant. Can I say I did not use the property throughout the year for my residence? Yes or no? I could use it for 9 months only. I could use it for. But for the balance 3 months, did I take any financial or economic benefit from the property? No, I kept the property idle. I could not occupy the property for the balance 3 months because of the reason that I had to shift somewhere else due to my employment, due to my business, due to my profession. I had to shift to some other city. And as a reason of that, I could not occupy the property throughout the year. I could not use the property as a self-occupied property. And for the balance period for which the property could not be used for self-occupation, I did not take any economic or monetary benefit out of that property. This type of property can also be treated as SOP. Now you have 3 cases. How many cases? All the 3 cases. If any such property you see, only then you can call such property as SOP. Only then such property can be given the status of SOP. Will you remember this? The moment you start taking the monetary benefit out of the property, economic benefit out of the property, the SOP status goes away. The SOP status, now it will never come back. Getting my point? Now the property will be treated as LOP. What will be the status of the property? So now tell me, in my case, 23(3). 23. What is the nature of the property? Partly and partly. Okay, no? Can you see I have let out the property? Meaning I have started taking the monetary benefit out of the property. This property cannot be treated as SOP. So, I will have to give what status to this property? This property will also be treated as LOP because I am taking the economic benefit. Ask yourself now 3 questions. Throughout the year, used for residence? No, only part of the year, sir. Throughout the year, used for residence? No, only part of the year. So, first case of SOP, not covered. Second case, throughout the year, kept vacant, kept reserved without any economic benefit? No, sir. Part of the year kept vacant, part of the year self-occupied and part of the year I am taking economic benefit. Oh, part of the year you are self-occupying and the remaining part you are keeping idle, you are keeping vacant. No, remaining part I am letting out and taking the economic benefit. So this property does not fall under any of those 3 cases of SOP. So the status of SOP cannot be given to these type of properties. What the status will be? LOP. What the status will be? And such type of property, the annual value will now be taxable. And do you know how to calculate the annual value of let out property? It is given in 23(1). Yes or no? So just like you calculate the annual value of let out property under section 23(1), in the same manner, you are supposed to calculate the annual value of this property also. Why? Because this property is also treated as what? Let out property. Will you remember this? Hello. Next one. 23.1. 23.1. Annual value. Taxable or not taxable? We'll learn the calculation. Okay, no? 23.2. All SOPs. Any two SOP at the option of the annual value. Annual value. Taxable, not taxable. Directly take the annual value as nil. Hello, no need to calculate also. Getting my point? Third one. Partly let out, partly self-occupied. Based on what will you do? Always give single status to such property. Always give what status? LOP, no? So the annual value of this property will be calculated. And will it be taxable or it will not be taxable? And the calculation will happen in the same manner in which it is done for LOP. Yes or no? What if you are having multiple SOPs, more than two SOPs? Two SOPs you have already claimed as exempt. What about the other SOPs? They will be covered by 23.4. They will be covered by 23. And they will be known as what? Deemed to be. Deemed to be. Its annual value will be taxable or will not be taxable? Taxable. And how it will be calculated? In the same manner in which it is calculated for. Did you understand one thing? You just have to learn this thing. You just have to learn this thing. If you learn this thing now, 23.4 is automatically done. 23.3 will also automatically done. Getting my point? Now tell me, can you have a property which is partly let out and partly self-occupied based on area? Meaning that, see, this is your property, okay, no? This is first floor. So this is let out. This is let out and this is self-occupied. What will you do with this property? Considered as, you mean to say full property will be treated as let out. Apply some logic. Full property, if you are treating as let out property, meaning that the rent earning capacity of the full property is taxable. Are you exploiting the rent earning capacity of this portion? And still you want to pay tax on that rent earning capacity? It is not good, no? Hello? Sir, do one thing. Full property SOP. Full property, but bloody, you are exploiting the rent earning capacity of this portion, no? If you claim that the entire property is SOP, entire property is, hello, then you mean to say that the annual value, the rent earning capacity of the entire property is exempt. But you have exploited the rent earning capacity of this portion. How can we exempt the rent earning capacity of the full property if out of this property some portion rent earning capacity you are exploiting also and earning rent also? So the government is not going to give you the exemption for the annual value of the entire property, saying that it is SOP. No, not possible. Because you are exploiting the rent earning capacity of this portion. Getting my point? What if entire property is treated as let out property? Meaning that the government is saying that full property, let out property, and pay tax on the rent earning capacity of the full property. Now will you like it? Why? Because you will tell the government, no, that government, if I am not exploiting the rent earning capacity of this property, why would I pay tax on the rent earning capacity of this portion? So it is not good to charge the entire rent earning capacity of the entire property. Getting my point? And it is also not good to exempt the entire rent earning capacity of the entire property. Now in this case, you will give double status. You will give consider this part as your separate property. Consider the let out portion as your separate property and calculate the annual value of this part. That will be taxable. Yes or no? And consider this self-occupied portion as your separate property. This is the only self-occupied portion you are having. Then annual value of any two SOP is exempt. So you can take the exemption of this portion. Getting my point? What if you are having one more SOP and this SOP portion? Then that SOP and this SOP portion, two SOPs you can claim as exempt. Hello sir. What if you are already having two SOPs and this is the third self-occupied property? Then out of three, if you have already claimed the exemption for other two SOPs, then this self-occupied portion will be treated as your DLOP. Getting my point? Hello? You cannot give a single status for the full property. What you are going to do? Consider this portion as your separate property, give the status LOP. Calculate the annual value and pay tax on that. Getting my point? Consider this portion as your separate property and you can take the exemption of this self-occupied portion also as if it is self-occupied property separately. Understanding? So do you know how to calculate the annual value of let out portion? Hello? So in that same manner, the annual value of this portion will be calculated, assuming that it is a separate house property. Getting my point? And for this, can you say two SOPs annual value is exempt? So if this is the first or if this is second, then the annual value you can take as exempt. But already you have taken the exemption for other two SOPs, then this self-occupied portion will be separately treated as your deemed let out property. Getting my point? So how to do that, how to do the calculations and all, we are going to learn in the questions. Will you remember this? Hello sir. Now the last subsection is 23.5. See 23.1 we know this talks about let out property. 23.2 it talks about two SOP. 23.3 talks about partly let out, partly self-occupied based on time. 23.4 talks about DLOP. 23.4 talks about and 23.5 talks about properties held as stock in trade in the business. Properties held as, what will happen for the annual value of this property? How it will be taxable? That is given in section number 23.5. I'm not going to discuss anything about this right now, otherwise you will get confused. Okay. So tell me, did you know that 5 subsections we are supposed to do? First subsection, second subsection, 2 SOPs. Third, partly let out, partly self-occupied based on. Fourth, deemed to be let out. And subsection 5 talks about the properties only, house properties only, but these properties are held by the assessee as stock in trade in his business, meaning that he is in the business of dealing in properties. He is in the business of constructing the properties. Yes or no? So in the case of such assessees who are having properties as his stock in trade, how the annual value of this property will be dealt with under the head house property is given in section 23.5 that we are going to discuss later on. Okay. Now, in short, can I say either the property will be LOP, either the property will be, or the property will be SOP, or the property will be DLOP. Okay, no? Now, I am telling you how to calculate the annual value. How to calculate the, see, A, you will take the municipal value of the property. What will you take? Municipal value is nothing but the value of the property in the records of municipality. Yes or no? That is known as municipal value. Then you will take fair rent of the property. What are you going to take? Now you will have to compare these two amounts. You are going to compare these two amounts, whichever is higher. Can I say higher of A and B will become your C. So you are supposed to take higher amount out of these two. Okay, no? That will be C. Now C amount will be compared with D, standard rent of the property. Higher amount will be compared with standard rent. And lower of C and D will be treated as your expected rent of the property. Will be treated as expected rent, meaning that how much rent your property is expected to earn if it is let out throughout the previous year. It is the expectation of the government from your property that if your property is being let out for the full year, how much rent your property can fetch, how much rent your property can earn. Expectation of the government is known as expected rent, that we expect this year you are going to earn this much rent from the property. Getting my point? Now tell us how much rent you are actually earning. How much rent you are actually earning, because we want to compare your actual rent with the expected rent. Getting my point? So you are going to take actual rent. You are going to take. Now tell me, expected rent was 5 lakhs. Expected rent was. So actual should be minimum 5 lakhs or more. Actual should be minimum. If it is less than 5 lakh, then either you are trying to hide something from us, or you are trying to fool us, or you are a mad fellow. Bloody, your property can earn 5 lakhs and still you are earning less. Getting my point? In all those cases where the actual rent is lower, than the expected rent, your actual rent will be ignored and expected rent will be treated as the rent earning capacity, meaning that gross annual value. Gross annual, this is the basic calculation. Please understand this thing first. Okay, no? What is gross annual value? Gross annual value is nothing but higher of expected rent and actual rent. Higher of, and we are expecting that you are going to earn 5 lakh. According to us, the rent earning capacity of your property is how much? 5 lakhs. How much you are actually earning? Only 4 lakhs. Not possible only. Not, because this is the minimum expectation. We are not expecting too much, but this is the bare minimum which your property should give us. And you are telling us that your actual rent is lower than this expected rent, which is the bare minimum which your property can earn. Either you are trying to fool us, hello, or you are yourself a fool. That if your property can earn minimum 5 lakhs, still you are earning 4 lakhs. Or you are trying to hide some income from us by showing only 4 lakhs. In that case, expected rent will be treated as gross annual value. What if the actual rent was 7 lakhs? Expected rent is only 5 lakhs. What is the actual rent? 7 lakhs. Oops. We expected that your property can earn how much? So according to us, the rent earning capacity was only, see, you are earning 7 lakh, meaning the rent earning capacity is not 5 lakh, it is 7 lakh. GAV will be 7 lakhs. Hello, sir. Getting my point? So what will be the GAV here? What will be the GAV? Either the expected rent or actual rent, whichever is. Either the expected rent or actual rent, whichever is. So can I say ER or AR, whichever is higher, will become your GAV, will become your. But wait, there is a possibility that during the previous year, if you have given the property on rent, if you have given the property on, so the tenant was supposed to pay you how much rent? Actual rent, yes or no? This actual rent is nothing but the rent which you are going to receive from the tenant. Out of this rent, if the tenant has not paid any rent, meaning bad debt, can I say there is cash sales and credit sales? Cash sales will not result into bad debt, but credit sales will result into bad debt. No, hello. So what if your debtor does not pay you the money? Does it become bad debt? Yes. So here also this can happen. Because the actual rent which you are going to take is nothing but actual rent received as well as actual rent receivable. Hello? Actual rent received as well as actual rent receivable. So the rent which was receivable for this year, hello? The rent which was receivable for this year, out of that rent, if the tenant has not paid any rent and he has told you that, go, I am not going to pay that rent, do whatever you want. So can I say the rent which was receivable, will you receive that rent or that is becoming bad debt? Bad debt, that type of rent is known as unrealized rent. What will you call it? That should not form part of your annual value. That should not form part of your. So do one thing, the GAV which you have calculated, in that GAV, from that GAV, if there was some unrealized rent, what did I say? If there was some unrealized rent, reduce that unrealized rent, if any. If, so then final amount you are going to get, final GAV you are going to get. This is your final gross annual value. Yes or no? Hello, sir. Now, there is one more way of the treatment of unrealized rent. One more way in which the unrealized rent can be treated. See, what we have done, we have first calculated GAV. We have first calculated. Out of this unrealized rent, we are reducing here, no? Hello, sir. What we can do, you know, this unrealized rent, if any, can be reduced here also. I have just shifted it above GAV. From your actual rent, whatever rent was unrealized, you reduce that and take the balance actual rent only. Getting my point? This is another way of presentation. Getting my point? And then balance actual rent you compare with expected rent and you are going to get GAV. Or you can reduce it from GAV also. Sir, can you reduce it from here? Yes or no? Can you reduce it from here? Can you reduce it from here? Can you reduce it from here? Both the ways your answer will be correct. But the answer might come different. What did I say? Your answer might come different. Might be. Yes or no? We are going to see in the calculation. See, this you do know, this. If you reduce your unrealized rent from actual rent, as per theory, it is correct. As per law, legal language, this is correct. You are going to get full marks also if you do it. But your answer will not be logical answer. Getting my point? But if you do it here, this is practically correct. What did I say? Practically correct means in the income tax returns, which you file to the income tax department, in the income tax returns which you file to income tax department, in those returns, such type of treatment is given. That reduce your unrealized rent from your GAV. It is given in the income tax returns. So this is practically correct. Because our income tax department also wants us to reduce it from GAV. Getting my point? Full marks will be given for this. And your answer will also be logical. So now we have two ways to adjust your unrealized rent. Two ways. One, theoretically correct. You will get full marks. Hello? But logically, not okay. Another way, practically correct. You will get full marks also and logically very okay. Which one would you like to follow? Second one. Hence, I have already reduced it from there. Getting my point? But in the examination, whenever you will have this, you are supposed to write a small note. What note you will write? That in the above solution, we have reduced the amount of unrealized rent from the amount of GAV. From the amount of alternatively, it could have been reduced from the amount of actual rent also. In that case, the GAV would have been this much. A little bit different. Yes or no? You will get full marks. You will get full marks. Don't worry about that. Understanding what I am trying to do. First, what are you going to take? Come on, tell me. MV means market value or municipal value. Second is, whichever is, compare that higher amount with higher amount or standard rent, whichever is, that will become the expected rent. That will become the, and expected rent will be compared with, whichever is higher will become your GAV. Whichever is higher will become. Then from that, reduce unrealized rent, if any, you will get the final amount of GAV. Got it, sir? Alternatively, unrealized rent can be reduced from actual rent also, but we are not going to do. Always we are going to follow this. Did you calculate the GAV? Did you calculate the GAV? This is section 23(1). GAV calculation for let out properties. GAV calculation for when there is no vacancy. When there is, you can directly compare expected rent and actual rent, whichever is higher. But if there is a vacancy in that property, then can you directly compare whichever is higher? No. In that case, how to calculate the GAV, that I will show you. Don't worry about that. Okay. But first of all, understand this entire process. You have to remember this format as it is. Don't shuffle the things. Same order you are supposed to remember. Okay, no? Follow this process. Look at the question. Every amount which I am giving you here, no? Everything which I am writing here, every amount you are going to get from the question. Pick up that amount and show that amount in the format. That's it. This question will be easily solved. But you have to remember this format. Will you? First thing. Municipal value. Fair rent. Compared with, whichever is compared with standard rent. Whichever is lower, that lower amount will be expected rent. Compared with, you will get GAV. Usually, expected rent or actual rent, whichever is higher, is taken as GAV. Did I say always or usually? Usually, expected rent or actual rent, whichever is higher, will be taken as GAV. Understanding? From that GAV, reduce what? Unrealized rent, if any, whatever will be resulting figure, that will be your final GAV. Okay. Now see, this is let out property. Municipal value, fair rent, hello, whichever is higher compared with standard rent, whichever is lower becomes expected rent, compare with actual rent, you are going to get GAV minus unrealized rent, final GAV. Yes or no? This is the calculation for. So did you know how to calculate the annual value of GAV of let out property? Now from this GAV, municipal tax paid during the previous year. After that, what are you going to get? After that, net annual value you will get. Yes or no? This is the end of section 23. This is the end of section. So the net annual value which you are getting for the let out property, you are going to follow this process. Now from this net annual value, you are going to get deduction. 24 clause A, and 24 clause B. Yes or no? Standard deduction at the rate of 30% and interest on housing loan. This will be your final income of the let out property. Any let out property. You have one let out property. For that one let out property, calculation will happen like this. Hello, sir. You have two let out properties. Then let out property 1 also, let out property 2 also, calculation will happen like this separately. Yes or no? You have 4 let out properties. How many let out properties? Let out property 1, 2, 3, 4. Separately for each let out property, your calculation will happen like this. Hello, sir. Will you remember? Now let's come to SOP. Let's come to either it is one SOP or two SOP. Both the SOPs. Annual value is taxable or exempt? Taxable or exempt? What is exempt? Annual value. What is exempt? Directly take this amount as for first SOP also you are going to take nil. For the second SOP also you are going to take nil. Yes or no? So now the annual value which is going to be exempt. Now what they will be doing in the question, they are going to give you municipal value, fair rent, standard rent of this SOP. Even if you take those amounts, you will be calculating the GAV, and bloody that GAV you are going to exempt, you are going to take that amount as nil. Why are you considering those figures and calculating GAV? Hello. So what are you going to do? All these figures, all these are not applicable. No, don't take it nil. Take not applicable. Don't do the calculation above GAV. Getting my point? Because even if you do that calculation, whatever GAV comes, that is going to be exempt. You are going to take it as nil. Then why are you wasting your time to do those calculations? Yes or no? So for two SOPs, the calculation directly you can start from GAV. Getting my point? Directly you can start the calculation from. Now for this property, can you pay the municipal taxes to the municipality? Yes. For a let out property also, you are paying municipal taxes to municipality. So for your self-occupied property also, the municipality is going to take municipal taxes, no? Are you understanding what I am trying to tell you? For example, BBMT is there, no? Hello? BBMT is a municipality? BBMP. Is it a municipality? So municipality will say that okay, this property is let out. No, we'll take municipal taxes on this property. No, from your other properties which are self-occupied, we will not charge municipal tax on them. No, it does not happen. All the properties which are coming in the jurisdiction of BBMP is going to charge municipal taxes on all the properties. Hello, sir. Whether for you the property is LOP, for you the property is SOP, we don't care. We want the municipal taxes for all properties which are coming in our jurisdiction. Getting my point? So will they charge municipal tax on your SOP also? Hello? If you will take that municipal tax as deduction, it will be wrong. What the government says, are we charging tax on the annual value? Are we charging tax on the annual value of your SOP? No. Then you also don't claim municipal tax. No. Annual value we are forgetting. Municipal tax you forget. Because due to the deduction of municipal tax, here your net annual value will also come negative. And then 30% of this negative amount, more negative amount. Getting my point? That we don't want to do. That we don't want you to do. Getting my point? So do one thing. Instead of having a negative NAV, we want you to have nil NAV. So for this NAV to be nil, don't take the deduction of municipal tax. Even if you take, we are not going to allow. So any municipal tax paid with respect to your SOP, for which you are claiming exemption, will be allowed or will not be allowed? will not be allowed. You can take the municipal tax deduction only for your let out properties. Getting my point? You cannot take the municipal tax deduction for self-occupied properties. What it, sir? Even if you have paid. Even if the municipality has charged and you have paid, we are not going to allow. So, nil minus nil on your calculator. How much you will get? 30% of nil will be nil. Getting my point, sir? Now, only one deduction will be allowed. Only for this SOP, have you taken any housing loan? Yes. On that housing loan, have you paid any interest? Yes. That interest we are going to allow. Getting my point? Hello, sir. But this interest will be allowed subject to maximum limits. Full interest will not be allowed. We are going to allow limited amount of interest. Because if the full amount of interest we are going to allow, here the loss will be unlimited. Here the loss will be, because from nil, if you reduce something, it will result into loss, no? Hello? And if we are going to give you the deduction for interest on housing loan, interest on, if we don't restrict this deduction, then this loss will also be unlimited. Getting my point? We want to restrict the amount of your loss. Hence, we cannot allow you the full deduction of your interest. Interest will be allowed subject to limits. What are the limits that we are going to see? First of all, did you understand this full format? Hello? In this format, SOP, we are calculating for SOP. SOP, GAV you will take or you will not take? Directly nil. Hello, sir. Have you paid municipal tax for your SOP? Pay. We are not going to allow the deduction. Nil. Hello, sir. Even if you have paid, it will be taken as nil. So that your NAV becomes 30% of nil. Means standard deduction of nil will be nil only. Hello, sir. But only one deduction we are going to allow. If you have taken any housing loan for this SOP, so you might have paid interest on that housing loan. That interest we are going to allow. But don't ask for the unlimited deduction that, sir, whatever interest I have paid, allow me fully. No. That is possible for LOP. For LOP, you are showing taxable income, no? So from that LOP, annual value, you are going to take the deduction for interest. That will be allowed fully. Whatever interest is there, we are going to allow fully. But not in the case of SOP. Not in the case of, you should just thank us that we are going to give you deduction. Even after exempting your income, we are going to give you this exemption. So you should not be greedy. Claim the deduction subject to limit. So what will be the final income over here? Will it be a positive income or it will be a loss? It will be a loss, because nil minus this amount, this interest will result into a loss. Getting my point? Now tell me, is it necessary that you will always get a loss over here? Is it necessary that you are always going to get a loss over here? Loss will come only if interest deduction is given. What if no housing loan was taken for SOP? So there will be no interest. Hello? And if there is no interest, there cannot be a loss. The final income will be nil. Getting my point? Hello, sir. So tell me one thing. In the case of let out properties, the final income can be positive or it can be negative also. Final income can be positive and it can be negative also. Why positive? See, this NAV was 1 lakh. NAV was, and these two deductions are 70,000. Example. How much? So this will be positive 30,000 final income. Getting my point? Hello, sir. What if NAV is 1 lakh. NAV is, so this will be 30,000, meaning 30% of 1 lakh, yes or no? 30,000. And this interest was 2 lakh rupees. Interest was, so 2 lakh and 30,000, meaning 2 lakh 30,000 if you reduce from, is going to give you positive income or negative income? Negative 1 lakh 30 can also come. Getting my point? So your let out property final income can be positive also, final income can be negative also. Hello sir. But for your self occupied property, the final income will be nil, or it can be negative, or it can be, if you ever get a positive income here, okay, no, if you ever get a positive income in case of SOP, bring your SRO number to me. I will write a letter to ICAI. With immediate effect, the registration of this SRO number should be cancelled. Why? Bloody getting positive income for SOP. Will you ever get positive income for SOP? No. Either the income will be, or the income will be final income I am talking about. Yes or no? So now tell me, did you understand LOP and SOP? Now what about the DLOP? DLOP, annual value taxable, because it is deemed to be let out. Hello, annual value is, and that annual value is to be calculated in the same manner in which it is calculated for. Do you know how to calculate for LOP? In that same manner you have to calculate for. So what are you going to take first? Municipal value. Compare with higher amount. Compare with whichever is, that will be. Stop here now. Is it actually let out or deemed let out? For deemed let out properties, if you are writing actual rent over here, no, then also I will tell you to bring your SRO number. If property is actually let out, only then the actual rent will be there. If the property is not actually let out, it is deemed to be let out, there will not be any actual rent. So this part will not be applicable only. Getting my point? Actual rent. Hello? So can I say in that case, this amount will directly become your GAV. Getting my point? Directly become your. Sir, why you did not write this unrealized rent? Bloody unrealized rent happen from your actual rent only, no? If there is no actual rent, forget about unrealized rent also. So can I say your expected rent of the property will become your GAV, because there is no actual rent. Getting my point? Easy, very easy. You're supposed to calculate the expected rent, directly take that expected rent as GAV. Done. Okay. Now from that, reduce the municipal taxes. You are going to get NAV. Take 30% of your NAV, because that is a standard deduction. And if any housing loan is taken for this DLOP, on that housing loan, whatever interest is given, that interest is also going to be allowed. Unlimited amount. Yes or no? There is no limit, because there was no limit on the interest of LOP. So there will be no limit on the interest of DLOP also. Yes or no? Can I say here also you can get positive or negative income? Every DLOP. What did I say? Your calculation will happen like this. Okay. Now, one by one, what we are going to do, we are going to discuss the content of this format. What is municipal value? What is fair rent? Yes or no? Why do we compare both of them? Because if you will not understand these logics, see, I don't want to make you mechanical. Okay, no? If I can stop here, I can stop myself here without, explaining the meaning of this format. So then in that case, you'll never come to know that why the calculations happen like this. You will not get the logics. Everything will be magic. So you want to learn the magic or logic? Okay. First of all, tell me. One by one, I am going to discuss. First of all, please repeat the pro forma once with me. First, in chorus, your voice should come. First, compared with whichever is higher amount compared with higher amount of standard rent, whichever is that lower amount is expected rent compared with expected rent or actual rent, expected rent or actual rent, compared, yes or no? You are going to get GAV minus, if any, if you will get final amount of GAV. Hello, you will get from this final amount of GAV minus paid by assessee, yes or no? You will get from GAV minus municipal tax, you will get from this NAV, you are going to get a deduction for 24A, standard deduction, 30% of NAV, 24B, interest on, after taking these two deductions, the final taxable income of the property is calculated, yes or no? In SOP, in directly start from municipal tax paid by you. Will be allowed or will not be allowed? Not paid, then there is no problem only. But what if the municipal taxes are paid? Still, it will not be allowed as a deduction because GAV is getting exempted. Yes or no? So NAV will be GAV nil minus municipal tax nil. NAV will be 30% of that. Interest on housing loan. Allowed or not allowed? Allowed. Fully allowed or limited? Final amount will be nil or negative. This will happen for one SOP, two SOP. Rest all the SOPs will be treated as DLOP. Yes or no? How to calculate DLOP? First, compared with whichever is higher amount compared with whichever is that lower amount will be treated as that expected rent only will be treated as GAV because there is no actual rent. Property is deemed let out. Yes or no? Okay, from GAV minus actually paid. Yes or no? You will get NAV minus standard deduction at the rate of 30% of NAV minus interest on housing, not housing loan, interest on. Final amount can be positive, it can be negative. Will you remember this format? Please don't shuffle, okay, no? Exactly same sequence you are supposed to follow. Now tell me, for example, you are an assessee, okay? Sir, what is your name? What did you say? Mukil. Mukil is there. He is having one property, okay, which he has let out on a monthly rent of 40,000. Mukil, how much you are earning? How much you are earning? 40,000 per month. The property is let out. Okay. Now, if the year ends, so by the end of this year, how much rent he has earned? 48,000 per month multiplied by 12. Can I say the property will have total rent of 4,80,000? Done, sir? Done, sir? Now, after the year is ending, no, he is going to income tax department. He is telling the income tax officer that officer, I have one let out property. From that let out property, I am earning rent. On that rent, I want to pay income tax. On that rent, I want to pay income tax. Because for me, I am saying that my actual rent is how much? 4,80,000. Okay. Mukil is an honest person. Whatever he is earning, he is showing that amount only to the government. He is showing that amount only to his income tax officer. That see, I am an honest fellow. I am actually earning 40,000 per month. 40,000 per month into 12. 4,80,000 is my actual rent. This is my income of the property. I want to pay tax on this income. Hello? Income which I have actually earned. Tell me, will his income tax officer trust him? Believe him? He is an honest fellow. How that income tax officer will come to know that he is honest or a dishonest guy, corrupted guy? Hello? He does not stay with him, no? What if he is trying to show less income as a taxable income? So he will tell him, Mukil, please wait for some time. Okay? Please sit outside. Tea, coffee, etc. Mukil, let me check. How much you are earning, Mukil? For some time, don't tell me that how much you are earning, okay? Now, the income tax officer, before believing the assessee, he will himself try to check that how much the property could fetch. Hello? If the property is let out, how much rent the property could fetch. He will try to identify on his own. How will he identify? First of all, he will call that municipality. Which municipality? Under whose jurisdiction his property is situated. So, he will ask, Mukil, where is your property? Mukil will say, my property is in Bangalore. My property is in? Oh, so your property comes under the jurisdiction of BBMP. Okay, thank you. Huh? So now the income tax officer is calling BBMP. BBMP, Mukil's property is in your jurisdiction. BBMP says, yes, Mukil's property comes in our jurisdiction. Check your records. In your records, what annual value you all are taking for charging municipal tax from Mukil. Who is talking? Income tax officer. With whom? BBMP guys. Yes or no? BBMP. Tell me that Mukil's property is there in your jurisdiction. Yes or no? You also charge the municipal tax on the property. So that municipal tax which you are charging, for that you also value the property, no? You also determine the annual value of the property. So according to your records, what is the annual value? What is the of the property on which you all charge your municipal tax? Annual value of the property in the records of municipality under whose jurisdiction the property is coming. Because according to the municipality, your property annually can give you this much benefit. Annually, your property can give you this much benefit, meaning that municipal tax which we are going to charge on this value. And that value is known as what? Municipal value. So according to the records of the municipality, municipality would have calculated your annual value of the property on which they are charging what? Municipal tax. What is that annual value? According to the municipality, the benefit value of your property, that your property can give you this much benefit. How municipality calculates that? How municipality will calculate that? None of your business. Every municipality will have its own rules. Every municipality will have its own rules to determine that municipal value. Getting my point? So what is municipality? Come on, what is municipal value? Municipal value is the annual value of the property as per the municipal records. Annual benefit value of the property as per municipal records. Under whose jurisdiction your property falls. Yes or no? On that value only, the municipality also charges what? Their municipal tax. So before even trusting you, you are saying that for the full year, you are getting how much benefit? Assessee is saying that from this property, how much benefit he is getting as rent? 4,80,000. No, we will not believe you first. We will believe the municipality. Because they are not going to calculate a wrong amount to charge their municipal taxes. You can tell us a lie, but they cannot lie to us. According to them, the annual benefit value of your property is this much. According to them, you can earn this much from your property. So we are going to trust them first. Getting my point? Hello? According to the municipality, how much you can earn from your property, how much benefit can be derived from your property is nothing but municipal value. Okay? On that value only the municipality will charge municipal taxes. So, will they believe you first or they will believe municipality? So, hence, first what is taken? Municipal value is taken. Okay? So, now for example, municipality is saying, according to us, the annual benefit value is 3,60,000. What is this 3,60,000? This is municipal value. In the records of municipality, this value will be given. Getting my point? Are you going to calculate this? Is the examiner going to ask you calculate municipal value, or it will be given in the question? Directly take that amount. That's it. How the municipality will calculate this amount? None of your business. What did I say? Because they have their own rules to calculate this amount. Getting my point? Hello? Did you understand what is municipal value? Now, fair rent. What is fair rent? Where is your property situated? Bangalore. Where in Bangalore? Take the name of any area. Hello, can I say Malleshwaram? Where your property is situated? Bangalore, Malleshwaram. Hello? Bangalore has only this area or other areas also. Rajaji Nagar is there, then South End is there, then this Indira Nagar is there. Many areas are there, yes or no? But where your property is situated exactly? Malleshwaram. Malleshwaram, only you are the person, you are the only person having a property like this in Malleshwaram, no? Or similar properties can also be there in the same area. Similar properties can be there. Hello? For example, your property was 2 BHK. Your property is. So in Malleshwaram, only 1 2 BHK is there. Or other 2 BHKs will also be there. In the same locality, similar type of property can be there. I am not saying same property. I am saying, but similar type of property should be there in the same area. Same. So where the property is situated? Malleshwaram. In Malleshwaram, similar type of property is there. Before asking you that how much you are earning from your 2 BHK, let us check how much is the rent of those properties which are similar to your property, hello, in the same locality. For example, others are giving their 2 BHK flat on rent for 35,000 per month. So 2 BHK flat. any other 2 BHK flat in the same locality is available for a rent of 35,000. On an average, 35,000. So 35,000 into 12, how much? 35,000 into 12, how much? 4 lakh. Can I say this is the fair amount of rent which your property should also earn? So your property should earn whatever municipality thinks. Hello? Or your property should earn whatever rent prevailing in your area of similar type of properties. Yes or no? This or this, whichever is. This or this, whichever is. So according to us, your property should earn 4,20,000. Hello sir. Either your property should earn whatever the municipality thinks. Hello? Or your property should earn how much? The rent prevailing in your area, known as fair rent. Getting my point? So this or this, whichever is higher. We think that you are also going to earn how much? 4,20,000 from your property. But wait, if the property is covered by Rent Control Act, which act? Every state will have their own Rent Control Act. Ajay, if you don't want to sit, go out. You can right now only go out of the class if you are not interested. If you are here, I am here to teach and you are here to learn. And if you are not interested, you can go. Don't waste your time and don't disturb me. What I was saying? If in any state, see, different states are there. Every state has their own Rent Control Act. Every state has their. So according to that Rent Control Act, there is a control which the state government puts on the rent so that the rents are not unnecessarily higher. Yes or no? So if there was a Rent Control Act in your state and your property is covered by this Rent Control Act, then as per the Rent Control Act, there is a standard amount of rent, there is a standard or maximum amount of rent which you can ask from the tenant, not more than this. Yes or no? So it is a maximum amount of rent as per the Rent Control Act which you can charge from your tenant by letting out your property. So if our expectation is going above that standard rent, we are going to restrict our expectation to the extent of standard rent. We are not going to expect more than the standard rent. Getting my point? Standard rent is maximum amount of rent which a landlord can charge from his tenant as per the Rent Control Act of that state. Standard rent is not applicable for all the properties. Standard rent are applicable for certain specific type of properties. Yes or no? Are we going to learn the are we going to learn the Rent Control Act of each and every state? This amount will also be given in the question. In the examination, you want the amount of fair rent. Are you going to come out of the exam hall, roam around the Malleshwaram area, find out what is 2 BHK rent? This amount will also be given in the question. All the amounts are given in the question. I am just giving you the logic that why these amounts are arranged in such manner. Getting my point? What is municipal value? For the full year, how much you can earn from your property? As per municipal records, as per the municipality. That for the full year, how much your property can give you as a benefit? This value, who will calculate? Municipality, as per their own rules. Are you going to calculate it? None of your business. How they calculate? None of your business. It will be given in the question. So if for the full year, as per municipality, your property can earn how much? 3,60,000. So we are also going to assume that your property is going to give you how much income? 3,60,000, because municipality also thinks that your property can give you 3,60,000. But wait. The area where your property is situated, hello, in that area, similar type of property is giving a rent of 4,20,000. So no, 3,60,000 or 4,20,000. You should also be earning 4,20,000 from this property, because similar type of property in your area earns a rent of 4,20,000. So your property should also earn 4,20,000. So how much as per municipality? 360. How much is rent prevailing in your area? Whichever is. So we will also think that your property can give you 4,20,000. Your property should earn a rent of 4,20,000. But see, our expectation is 4,20,000, that we are expecting your property should earn how much? 4,20,000. We will not allow our expectation to go beyond standard rent. We will not allow our expectation to go beyond. We will restrict the expectation to the extent of standard rent. Getting my point? If your property is covered by the Rent Control Act of the state, and the standard rent was also applicable on your property. What is standard rent? Standard rent is the maximum amount of rent as per the Rent Control Act. Standard rent is the maximum amount of rent as per the Rent Control Act, which a landlord can recover from the tenant. So you must be following the law. So we cannot expect that you are earning more than this standard rent. We are going to restrict our expectation to the extent of standard rent. If our expectation is higher, we will not take higher amount as expected rent. We are going to take the standard rent as expected rent. Getting my point? But what if our expectation was already lower than standard rent? Are we expecting to the extent of standard rent, or we are expecting less than that? Already we are expecting less as compared to standard rent. So expected rent will be that less amount, yes or no? So for example, this is a higher amount. This is the, you are going to compare it with, what if the standard rent is 3 lakhs? So our expectation will also be 3 lakhs. Our expectation cannot be more than 3 lakhs. Hello sir. What if the standard rent is 7 lakhs? Anyways, we are not expecting 7 lakhs. We are expecting less than that only, no? So expected rent will be 4,20,000. Getting my point? So can I say standard rent? Let's take a standard rent of 5 lakhs. Let's take a standard rent of. So tell me, now this or this, whichever is lower. 4,20,000. What is this? Mukil was sitting outside. You remember, no? Mukil, you are sitting outside. And inside the office, the income tax officer is calculating all such amounts. How much he calculated? Now he will call Mukil. Mukil, please come inside. Now tell me, from your property, how much you are earning? Actual rent. How much you are earning? Actual. How much he was earning? 4 lakh. Mukil will say 4,80,000. Municipal value, fair, 4 lakh. 4,20,000, no? We are expecting. Calculation will not be shown to him. Why would I show? Checking, no? So for checking, will I show the, see, I am expecting, no. Calculation I will do. How much I am expecting? 4,20,000. How much is your actual rent? More than our expectation. Good, good. Rent earning capacity of the property was 480. You are earning 480, GAV will be 480. Pay tax on 480. Hello? Understanding? Wait. Mukil is saying that he is earning only 30,000 per month. Then this will be? Wait. Calculation. How much? We are expecting how much? Mukil, how much you are earning? Huh? 3 lakh? Already less we have expected. Municipal value, fair rent, whichever is higher. So we were expecting higher amount, but we have restricted our expectation to meaning that minimum his property should earn 4,20,000. Minimum. How much you are earning? I will think. This fellow is thinking that I am fool. 4,20,000 I have already calculated. This is the bare minimum which he should earn. Lower than this he is showing. Either he thinks that I am fool or he himself is fool. Mukil, how much you are earning? 360. Pay tax on 420. Because according to us, the rent earning capacity is 420. And you are showing less than that, we are not going to charge tax on less amount. According to us, the rent earning capacity is 420, pay tax on 420. Mukil will say, why? You must be taking the rent higher than 420 only. But you are trying to show only 360. Don't try to fool us. Mukil said, no sir, seriously, I earn only 360 sir. Seriously sir, mother swear, I am not earning more than that sir. Mukil, then you are a fool person, you know. Your property can earn 4,20,000 and still you are earning. From next time onwards, he will be careful that if his property can earn at least 420, now he will also find out such type of tenants who can give him actually 4,20,000 or more. Understanding? That way we are also going to get more tax, no? Getting my point? So what was the meaning of this entire calculation? Did you all understand? See, these calculations are not done in practical life, in real life. But your law says that the annual value is calculated based on these principles. Based on these principles. Yes or no? Annual value is nothing but whatever is the annual benefit value of your property in the records of municipality, or whatever the rent which is prevailing in your area where your property is situated, whichever is higher. That higher amount will be expected from your property also, that your property should also earn this much higher amount. But since the higher amount, since it is a higher of municipal value and fair rent, and if there is an applicability of standard rent also, expectation should not go beyond standard rent. So expected rent will be restricted to the extent of maximum standard rent. And that expected rent is nothing but what your property can fetch, what minimum amount of rent your property could fetch if it is let out during the previous year. Getting my point? Now that expected rent will be compared with your actual rent in order to know that what is the rent earning capacity of your property. If you are saying that you are earning more than this amount, then definitely the rent earning capacity is higher, which you are exploiting in the form of rent, actual rent. Make that actual rent only as a rent earning capacity and pay tax on that. Make that actual rent earning capacity, actual rent only as your rent earning capacity, meaning GAV, and pay tax on that. But if you are saying that your rent which you are earning is lower than this expected rent, then we cannot accept the rent earning capacity below the expected rent, if you are saying that you are earning less, but the rent earning capacity is not what you are earning, it is what we are expecting. In that case, expected rent will be treated as your GAV. Will you understand this? Hello, sir. So now pay attention here. What is this? 23, 23, 1, 23. GAV of will be taxable or will not be taxable? How to calculate this GAV? Municipal value, fair rent, whichever is higher compared to standard rent, whichever is, will become expected rent will be compared with, you will get GAV. You will get, okay, no? From that you are going to reduce unrealized rent to get final amount of rent. Hello, sir. Do you remember this unrealized rent? This unrealized rent can be reduced from here also. It can be reduced from here also. It can be reduced from here also. It can be reduced from here also. Getting my point? So what I have done? I have reduced it from actual rent. If this is done, theoretically correct? Hello? Will you get full marks? But the answer will not be logical. But alternatively, compare actual rent and expected rent, calculate GAV. Compare actual rent and expected rent, calculate. And from that GAV also this can be reduced. Yes or no? What is municipal value? I have already explained. What is municipal value? I have already explained. Come on. It is the of the as per the of the under whose jurisdiction the property is. Okay. What is fair rent? It is the rent of a in the also known as reasonable rent or reasonable letting value or best estimate of rent. Fair rent, different names are there. Yes or no? Next one, what is? It is the maximum amount of rent which the can recover from the as per the of the state, if any. It is not applicable in all state for all properties. It is applicable in few states in the case of few properties, so that the rent is not unnecessarily exceeding. Yes or no? To have a control on the rent on certain type of property in certain localities, this rent control act is there. Yes or no? So if your property is getting covered, standard rent will be there. If your property is not covered, then standard rent will not be there. Getting my point? If standard rent is not there, what are you going to take? Nil? No. Higher amount or nil? Whichever is lower, nil. Expected rent will become nil. Ayyo, how the government will expect nil rent from your property? So if standard rent is not there, don't write nil. What you will write? Not applicable. What will you write here? If the standard rent is available, then write down the amount. And if it is not given in the question, meaning the standard rent is not available, not applicable, that does not mean that it is nil. Getting my point? So, standard rent. What is the expected rent? It is the rent potential of the, it is the notional amount. Notional means imaginary amount of rent which the property could fetch if it is let out during the previous year. Okay, no? Now, what is actual rent? Wait. Till expected rent, any problem? Understood everything? Okay. Now, the first place where the students get problem is to ascertain the amount of actual rent. So, in the entire chapter, what are the pain points? First pain point will be to calculate the amount of actual rent. Okay? Because here you have to do the things, no? Because all the other things will be already given in the question. You are going to set those things in the format. You are going to get the answers very easily. But now your involvement, your mind application is to be applied here. So wherever you are required to put efforts, no, there you commit mistakes. Hello. So tell me, What is the meaning of actual rent? According to you and your understanding, I want to know what is actual rent? The amount of the tenant pays. Amount of rent which the tenant pays. Anyone else? Amount received by the tenant. Received by the assessee. From the, okay. Anyone else? Received and by assessee. By assessee, no? From the, okay, anyone else? Whatever you told me and whatever you are thinking, forget it. Hello? Whatever you told me and whatever you are, forget it. Actual rent, you will take only whatever I will write here. Nothing else. 500 times you are going to repeat this. But don't forget whatever I am writing. Okay? And I am going to make few examples also here for your better understanding. Actual rent is the rent for the period for which property is actually let out during the previous year, whether received or receivable. Actual rent is the rent for the period for which the property is actually let out during the previous year, whether received or received. Okay, no? Hello, sir. So now, pay attention. If your previous year starts from 1st April, it is ending on 31st March. 1st April 25 to 31st March 2026. Can you let out your property for full months, full 12 months? Hello? But for that you should be the owner of the property for the full year. First question to be asked, are you the owner of the property for the full year from April to March? Yes or no? So your ownership period is 12 months. First question, your ownership period. So from question only you will come to know that what is the ownership period. For how many months you are owning the property. If question is silent. If question is, we will assume that the property is owned by the assessee from the beginning of the year till the end of the year. So tell me, what is the total ownership period? 12 months ownership is there? Okay, tell me yes or no. Out of this 12 months of ownership, the property can be let out for full 12 months. Hello, sir. And the property can be let out for 10 months also, no? In that case, what about those 2 months? Property actually let out or not let out? For these 2 months, the property will lie vacant. This is vacancy. This is, and what is this? Period for which the property is let out. So vacancy period will be out of your ownership period, and let out period will also be out of your ownership period. Getting my point? So can I say, if you are the owner of the property for the full previous year, if you are the owner of the property for the, meaning that for the entire previous year, for the entire 12 months, you are the owner of the property. Now out of this ownership period only, the property can be let out. Can I say for the entire ownership period, the property was let out? Hello? So property is let out for full 12 months? Yes or no? Or can I say the property is let out for 10 months also? Two cases are there, no? Hello? Here, 0 month vacancy. Here, for the entire ownership period, if the property is let out, hello, is there any vacancy or no vacancy? No vacancy. 12 months ownership, 12 months let out. Getting my point? So can I say out of 12 months ownership, you are letting out the property only for, what about the balance 2 months? This is, will you remember this? Now my first question, you have to calculate expected rent, you have to calculate actual rent, you have to calculate expected rent, you are supposed to calculate in the first case, this is first case, okay. In the first case, when the property is let out throughout your ownership period, there is not a single month of vacancy. Actual rent will be for how many months? Read this. Actual rent is the rent for the which period? Period for which the property is. Now tell me, actual let out period is how much? How many months? So actual rent will be for how many months? Got it, no? Now tell me, expected rent will be for how many months? 12 months. Expected rent will also be for, any problem here? Why did you take actual rent 12 months? Why did you take actual rent 12 months? Because the property was, so whatever the rent for the let out period will be there, that will be known as actual rent. Yes or no, sir? Why did you take expected rent 12 months? Sir, because the property was let out for, hence I'll give you a tight slap now. For actual rent, you are going to see let out period. For actual rent, you are going to see, but for expected rent, you are always going to see how much is the ownership. So expected rent will be calculated for 12 months. During your entire ownership period in the previous year, how much rent you can earn is your expected rent. Hello, sir. What is actual rent? Actual rent is not calculated for ownership period. Actual rent is calculated for let out period. Yes or no? So tell me, in the second example, you are going to tell me, okay, no? Expected rent, actual rent. Come on, tell me, actual rent for how many months? Actual rent for how many months? 10 months. Why 10 months? Property let out for 10 months. So actual rent also for, yes or no? Tell me, expected rent for how many months? Why 12 months, sir? Understanding? Because the ownership period was 12 months. So expected rent is also for. So what I have done, actually I am telling you now. See, during your previous year 25, 26, during your previous year, the property was owned by you for full 12 months. Ownership was full 12 months. Starting from 1st April 25 to 31st March 2026. For the full year, you had the ownership of the property. Now, out of this ownership, the property can be let out. The property can be for full 12 months or it can be let out for 10 months also. If it is let out for full 12 months, that means during the entire ownership period, the property was given on rent. That means vacancy is there or vacancy is not there? No vacancy. Yes or no? And if out of 12 months of ownership, the property is let out for 10 months, that means for the balance 2 months, the property remains under lock and key. Nobody is occupying the property. That means for those 2 months, the property is vacant. Vacancy is 2 months. So if you have to calculate the actual rent and if you have to calculate the expected rent, hello, for actual rent calculation, what did I say? For actual rent calculation, you are always going to see let out period, and for expected rent calculation, you are always supposed to see ownership period. Yes or no? So tell me, in my first case, how much was the let out period? How much was the let out period? So actual rent will be 12 months. In the second case, how much was my let out period? So actual rent will be 10 months. But in the both the cases, expected rent will be for, because the ownership is for, got it, sir? Hello, sir. Now, in the first case, no, you will not have any problem. Expected rent also for 12 months, actual rent also for. Can you compare both the figures, 12 months together, yes or no? Because both are for same period. 12 months actual rent, 12 months expected rent. Both are for the same period. Both can be compared directly. This or this, whichever is higher. If there is no vacancy. If there is, but what if there is vacancy? Actual rent is only for 10 months. Expected rent is for 12 months. Now compare whichever is higher. People will start telling you that he has gone mental. Comparing an amount of 10 months with amount of 12 months and saying that whichever is higher. You cannot do it. Here you cannot do expected rent or actual rent, whichever is higher. Why? Because both the amounts are not for same period. If they are not for same period, they are not comparable. Getting my point? So here, how to calculate your GAV? That we are going to understand. Hello, sir. In the case of vacancy, what did I say? In the case of vacancy in let out property, how will you calculate the GAV? Hello, sir. Now pay attention. What is this, sir? What is this? What is this? For how many months? For how many months? How do you calculate expected rent? How do you calculate expected rent? Based on three amounts. Principal value, fair rent. Whichever is compared with, whichever is, you get the amount of expected rent. Expected rent for how many months you want? So these three figures must be for 12 months. Municipal value of 12 months, fair rent of 12 months will give you higher amount for 12 months. Hello? You'll compare that higher amount of 12 months with standard rent of 12 months. Only then you are going to get expected rent of 12 months. Hello, sir. Expected rent is nothing but comparison of these three amounts, no? So if you want expected rent of 12 months, these three amounts should be for 12 months. If they are not given for 12 months, you will have to make them for 12 months. You will have to convert them into 12 months because sometimes monthly figures are given. Municipal value 30,000 per month. Fair rent 25,000 per month. Standard rent 20,000 per month. Monthly figures are given. Multiplied by how many months? So municipal value 12 months. Municipal value 12 months. Fair rent 12 months. Standard rent 12 months. All the three figures of 12 months will be compared. Only then you are going to get expected rent of 12 months. Understanding? Now tell me, can I say during the previous year 25, 26, hello, you had the ownership of how many months? Ownership of how many months? How come you are having an ownership of 10 months? In this year only, you have bought the property. This is the first year of your property. When the property is coming in your hands, when you are becoming the owner. Can I say you bought the property on 1st July? Hello? You bought the property on. So you became the owner on what date? You became the owner on what date? From 1st July to 31st March 2000. How many? Sorry, this is 26, no? Here also I have, no, here it is okay. Okay. So 1st July 2025 to 31st March 2000 and how many months are there? Calculate, no, properly. April, May, June, forget. 3 months, forget. July to March, it is 9 months, no? So you became the owner of the property for the first time in this year. And since the date you are becoming the owner, from that date till 31st March, your ownership is only 9 months. Now tell me, first question, can the property be let out for full 9 months? Hello, sir. The date on which you became the owner, no, from that same date you gave the property on rent. Tell me any vacancy or no vacancy? How many months? Actual rent. Actual rent will always be for. So how much is the let out period? Actual rent will be for 9 months. Yes or no? How many months the expected rent is calculated based on ownership? So how much is the ownership? So expected rent will also be for. Got it, sir? Now tell me, out of 9 months, you have given the property on rent for 6 months only. Balance 3 months of ownership period. The property was vacant. So actual rent, how many months? Actual rent, how many months? Expected rent, how many months? Got it, sir? Now see, this is case 1. Case, and this is case 3. Case 1, actual rent for 12 months, expected rent for, actual rent for, expected rent for. Can you directly compare both of them? Yes. In this case, expected rent or actual rent, whichever is higher, because there was no vacancy. So can I say case 1 and case 3, where vacancy is there or no vacancy is there? In case of no vacancy, what you will do? Expected rent for whatever months, 12 months or 9 months, as the case may be. Actual rent will be for same months, no? Hello? Will be for same months, 12 months, 9 months, as the case may be. Whichever is higher amount is equal to GAV. Will you be able to calculate GAV? Hello? One question we are going to solve. In that question, you are going to calculate the GAV only. So if vacancy is not there, GAV will be calculated like this. Case number 1, case number. Now pay attention here. In this case and in this case, can I say this is case number 2? This is case number. In both the cases, vacancy is there. Can you see? Hence, both the amounts are not for same period. Can you calculate? Can you directly compare expected rent or actual rent, whichever is higher? You cannot do. In the case of vacancy, in the case of, never take higher of actual rent or expected rent. Never take higher of actual rent and expected rent. What are you going to do in that case? Now I will tell you. See. So I am talking about which cases? Case 2 and case 4. In both the cases, no vacancy or vacancy? No vacancy or vacancy? Vacancy is there. Vacancy is. Now, please ask yourself one question. Even if vacancy is there, even if the actual rent is for lower period and expected rent is for higher period. Hello? Actual rent is for lower period. Expected rent is for higher period. Actual rent less period. Expected rent more period. Yes or no? Even if vacancy is there, even if vacancy is there and actual rent is for lower period and expected rent is for higher period, still your actual rent, still your is greater than or equal to expected rent. What if the amount of actual rent is equal to or higher than amount of expected rent? Hello? 2 months vacancy is there in the case number 2. Can you see 2 months vacancy is there? Hello? Even if my property was vacant for 2 months, I am getting actual rent only for, still this 10 months actual rent is equal to or higher than your expected rent. I am not trying to hide anything from you. Government, I am not trying to hide anything from you. Even if the property is vacant, for these 10 months, I am showing a rent of an amount. I am showing actual rent which is equal to your expectation for 12 months, or I am showing an actual rent which is higher than your 12 months expectation. Just imagine if these 2 months vacancy was not there. Hello, still I would have shown more amount. Getting my point? That means I am not trying to hide anything from the government. My actual rent for lower period is equal to your higher period, or even it is more than your higher period. So government says, no problem, no. See, we are expecting for how many months? 12 months. We are expecting for, and he is showing the 10 months actual rent equal to our expectation of 12 months, or even more than expectation of 12 months. So let's not put him in problem. In this case, take the actual rent only as GAV. Take the actual rent only as GAV. Because see, vacancy is there. Actual rent is calculated only for 10 months. Still the 10 months actual rent he is showing equal to our expectation or more than our expectation for 12 months. That means the assessee is not trying to hide anything from us. Assessee is a genuine person. Assessee is an honest person. Except his actual rent only as GAV. Getting my point? Hello? What if the actual rent is lower than expected rent? Now the government will become cautious. Why? We are expecting that for 12 months you should earn this much. Example, 3 lakhs. What is the 12 months expectation of the government? 3 lakhs. How much you are earning? Only 2,70,000 or only 2,80,000. How come 2,80,000? What will be your answer? Come on, tell me. Sir, my property is not let out for 12 months. My property is let out only for 10 months. Hello? So there was 2 months vacancy. And sir, since my property is not let out for the full year, there is a vacancy of 2 months. Because of that vacancy, no sir, my rent is lower as compared to your expected rent. Everyone will tell this, no? Hello? So if that is the case, then there is no problem. Because of vacancy, no? What? Because of vacancy, your actual rent was lower, then there is no problem. We'll take your actual rent only. So here, now what they will do? They will take your actual rent In that actual rent, they will add vacancy period rent. Vacancy period means the period for which the property is vacant. In that period also, if you would have earned the same amount of rent, yes or no? Then for actual rent for this period and for this period, both period taken together, whatever rent would have come, that rent we are now going to compare with our expected rent. Getting my point? Now after adding vacancy period rent in your actual rent, now the amount is greater than equal to our expected rent, means that vacancy was the reason for which, due to which your actual rent was lower. No problem, no problem. In this case also, take actual rent only as your GAV. Got it, sir? But what if even after adding vacancy rent to actual rent, still your total is not more than expected rent? Still it is not more than. That means vacancy is not the reason for your actual rent to be less as compared to our expectation. In this case, your actual rent, cannot be taken as GAV. In this case, expected rent will be taken as your GAV. Only one case you are going to take GAV. As what? Only in one case you are going to take expected rent as GAV. Last case. So what are you going to see? If there is no vacancy. If there is, what are you going to do? Actual rent or expected rent, whichever is. Actual rent or expected rent, whichever is. If there is no vacancy. If there is, what if there is vacancy? What if there is? And your actual rent is greater than or equal to expected rent. Vacancy is also there and your actual rent is equal to expected rent, or it is still more than expected rent. Don't worry. Don't worry. Are you showing equal to our expectation? Are you showing more than our expectation? Then whatever you are showing will be treated as GAV. In that case, actual rent will become GAV. Hello, sir. Now what if actual rent is less than expected rent? What if actual rent is less than? How much we are expecting? How much we are expecting? 3 lakhs. How much you are showing? Oh, only 2,10,000. Only? Meaning, are you showing an actual rent equal to our expectation? No. More than our expectation? No. Less than our expectation you are showing the actual rent. Why? You will say, oh, vacancy. Wait, vacancy was the reason. No. Your actual rent is less as compared to our expected rent because of vacancy only, no? Okay, wait. We will take your actual rent. In this, we will add vacancy period rent. Hello. The period for which the property was vacant. The period for which the property was. In that period, if you would have earned the same amount of rent, what rent you would have received? That is a vacancy period of rent. Yes or no? So now, can I say this is the actual rent for the let out period? This is the vacancy rent for the vacancy period. Both taken together. Both taken should be greater than or equal to our expectation. Should be greater than or equal to our expectation. If this is the case, then only the vacancy is the reason. No. Hello. Then also no problem. Actual rent will be taken as your GAV. In this case also we are going to take actual rent. Your actual rent as GAV. Getting my point? But what if even after adding vacancy rent in your actual rent, still your total is not more than our, meaning vacancy is not the reason only. Your actual rent is lower than expected rent, not because of vacancy, because of any other reason. We have tried to add the vacancy rent. After adding vacancy rent also, still the total is less as compared to our expectation, meaning that vacancy is not the reason for your actual rent to be lower than our expectation. Reason is something else. In every such cases, your actual rent will be ignored and the expected rent will be treated as will you be able to calculate GAV like this? Hello sir, what is actual rent? Actual rent is the rent for the period for which the property is actually let out. Actual rent is the rent for the period for which the property is actually whether received or receivable. Whether received or receivable will not make any difference. Whatever rent for the let out period is there, no, if that rent you have received, then also it is actual rent. If that rent is receivable, then also it is actual rent. Getting my point? What is expected rent? For how many months the expected rent will be calculated? Always for ownership period. Always for, if the ownership period for the full year, then expected rent is full year. Hello sir. If the ownership period is only 6 months, expected rent will be for 6 months. Out of that ownership period only, the property is let out. For how many months? That you have to see. Will you remember this? One question I am giving you right now. Calculate the GAV and give me the answer. Come on, fast. Let's go. Let's solve that question. Come on. Name of the head? Income from? Can you see illustration number 1? Hello? See, next page answer is there, okay, no? Now, in your notebooks, make the format, put these amounts in the format and give me the final answer. What should be the GAV in this case, this case, this case, this case and this case? Come on, calculate. In the question they are telling you, Jayashree owns how many properties? 5 houses in India, all of which are, compute the GAV of each house from the information given below. Start. Now you all are going to check the answers with me. Okay, no? See, municipal value or fair rent, whichever is, whichever is. So 90,000 is higher in first case. Okay, no? Higher amount compared with standard rent. Standard rent is not applicable. So what was the higher amount? So can I say that 90,000 will become expected rent and actual rent is already given in the question. Actual rent is already given in the, so expected rent or actual rent. See, if they have not told you anything about vacancy, if they have not told you anything about, meaning that no vacancy, directly compare expected rent or actual rent, whichever is. So in the first case, your GAV is, everyone got 90,000, 55,000 or 60,000, whichever is higher. 60,000 or 75,000, whichever is lower. Can I say this 60,000 will become your expected rent and actual rent is 72,000, whichever is. So 72,000 will become your GAV. Yes or no? Next one, 65 or 65, whichever is higher. 65. Hello sir. 65 or 58, whichever is lower. So 58 will become expected rent. Actual rent is 60. So what will be my GAV? 60,000. Very difficult, no sir? 24 or, yes sir. 24 and 25, whichever is 25. 25 are not applicable. So 25 will become your expected rent and actual rent is 30,000. Hello sir. So GAV will be, GAV will be, last case 80 or 75. Higher is 80. 80 or 78, whichever is lower. This is expected rent and this is actual rent. So 78,000 will become your GAV. So 90,000, 72,000, 60,000, 30 and 78. 90, 72, 60, 30, 78. 90, 72, 60, 30, 78. Easy or difficult? If you cannot do it, then no one can save you because there was no vacancy. Now, I will introduce vacancy here. Because in the examination, no, the questions will not be this much. Okay. Now pay attention here. Vacancy was, do one thing, on your, take your calculator, take 72,000, divide by 9 months. 8,000 is there, no? Okay. 3 months vacancy is there. Okay. Here also, here there is no vacancy. Okay. In the last one, take 60,000 and take 60,000 on your calculator and divide it by 10. Oh, it will be 6,000 only, don't worry. Yes, 2 months. Okay. This case also there is no vacancy. And in the last case, no, 72,000 divided by 10 will be 7,000. Okay, 2 months. Okay. Now, solve this question. Come on. This is assumed, na? This is assumed. This was not given in the question. I am making a question a little bit more difficult for you. That's it. Got the answers? Only one small information given and your minds stopped working. Remember, what did I say? You have to first check. In the first case, tell me, what is your municipal value? 80. Fair rent? 90. Whichever is higher. Higher amount is 90, yes or no? Okay. Higher amount is 90 and standard rent is not applicable, meaning that the expected rent will be 90 only, yes or no? Now tell me, actual rent, what did I say? Is the rent for the period for which the property is let out. So in my first case, the property is let out for how many months? 9 months, because there is 3 months vacancy. So can I say, if 3 months vacancy is there, actual rent is for 9 months. Actual rent is less than expected rent. See, this is your actual rent, which is for how many months? Is lower than expected rent? No. So in that case, what you do? In that case, what you do? Add vacancy. So vacancy is how many months? So for these 3 months, how much rent you would have got? 24,000. Sir, how come, sir? If 72,000 is for 9 months, meaning the monthly rent is how much? Monthly rent is 6,000. Sorry, 8,000. 72,000 divided by 9. 8,000 monthly rent. That 8,000 for these 3 months, if you would have received, how much vacancy period rent you would have got? 24,000. 24,000 plus 72,000. 96,000. Now tell me, is this 96,000 more than 90,000? Meaning that vacancy was the reason. What did I say? Vacancy was the reason. Because of that only the actual rent was lower. Getting my point? So in that case, what will I do? What will I do? Actual rent I will take as GAV. So here GAV will be how much? GAV will be 96,000. Yes or no? In the second case, what is the answer? 72,000. It will not change, no? Now third case, come on, tell me. 72,000. How come 72,000? 72,000 is not there only. Wait. See, 65 or 65, whichever is higher. 65. 65 or 58, whichever is lower. 58. Second case correct answer, no? 72. Second case 72, everyone is getting, no? Okay, here expected rent is 58,000. Can I say this 60,000 is my actual rent? Actual rent for how many months? 10 months. Why? Because 2 months was the vacancy. Now tell me, hello sir, hello, even if there is 2 months vacancy, even if there is, your actual rent is still higher than your expected rent. Hello? You are not supposed to add any vacancy. Why? Because vacancy you add only if the actual rent is lower than expected rent. In the first case, in this case, what you did, friends? Hello friends. What was your expected rent? Tell me. Expected rent for 12 months, 58,000. Okay, no? What was your actual rent for 10 months? Bloody, my actual rent is for 10 months. Still it is more than your expectation. Meaning that actual rent taken as GAV. What the government will say? What government will say? See, in 12 months we are expecting how much? 58. In 12 months we are expecting 58. But in 10 months only you are showing 60,000. That means you are a good guy. Your actual rent only will be taken as GAV. So here your GAV will be 60,000. Understood or not? Understood or not? Fourth case. 30,000. It will not change, no? Now the last case. See, expected rent will be 78,000. This is your actual rent. For how many months? 10 months. Pay attention here. Pay attention. What was expected rent for 12 months? 70. And what is actual rent for 10 months? 70. Actual rent more than or equal to expected rent or less than expected rent? Please add vacancy rent. Vacancy rent for 2 months will be 14,000. Did you get it? Vacancy rent for 2 months. How did you get 2 months vacancy rent? Because this is for 10 months. So 72,000 divided by 10 will be 7,200 per month. 7,200 into 2. You are going to get 14,000. Now add both of them. 86. 86. Now tell me, is it more than 78,000? Is this total more than 78,000? Meaning that vacancy was the reason. Meaning that, and because of vacancy only your actual rent is lower. In that case, what are you going to do? 72,000 you are going to take as GAV. Hello, sir. I knew that this is going to happen. I knew that this is going to. In the second case, what you did? Tell me here. In second case, what you did? Sorry, first case. Vacancy was there or not? Tell me. Now one by one, no? One by one you tell me. What was your expected rent for 12 months in first case? 90,000? Hello? Now, if this is 90,000, this is for how many months? 12 months. What was your actual rent in the first case? Actual rent was for 9 months and it was 72,000, no? Now tell me, is your actual rent lower than expected rent? Is your actual rent lower than expected rent? So what you did? Vacancy rent of 3 months you took, which was how much? 20. Now total was how much? Total was how much? Now actual rent plus vacancy rent total is more than the expected rent, no? In that case, what will be GAV? GAV will be actual rent 72,000. In first case, we have written 96, no? This is wrong, my mistake. This is 72,000. Why it happens, I am telling you. Pay attention. See, vacancy period, are you earning that rent? So why are you showing that in the calculation of your total, calculation of your GAV? If you are not earning that rent, then why are you showing? What are you earning? Either actual rent or expected rent you can earn. Getting my point? So either the actual rent will become your GAV or expected rent will become your GAV. No other amount can become your GAV. Hello. No other amount can become your GAV. Either the actual rent or the expected rent. So in my case, what was the actual rent? Come on, tell me. Or what is the expected rent? Either this amount will come as GAV or this amount will come as GAV. Any other amount cannot come as GAV. Getting my point? So now what you did? You added the vacancy rent. You added the Just to compare. Just to, bloody, this vacancy rent is not your income. Because for that vacancy period, if you would have let out the property, then you would have earned 24,000. Have you let out the property for this period? Have you earned this 24,000? So this should not be there in your GAV. How much you have earned? Either you have earned this or you can earn this. Either you have earned this or you can earn this. Either this can become your GAV or this can become your GAV. This can never become your GAV. This is just for the sake of comparison. Got it, sir? And if you will take this 96,000 as your GAV, that means that 24,000 which you have already not earned, you are taxing that amount also. Are you mad person? Hello? So what will be your GAV in the first case? 96,000 or 72,000? It has to be 72,000. Did you understand what mistake was there? What mistake was there? The moment you took 96,000, no? Comparison amount you are making as your GAV, meaning that this vacancy rent you are charging, which you have not earned only. And this should not be taxed. Got it? How much will be taxed? Either 72 or 90, any one amount. So in my case, what will be taxed? 72. Because in 72, when I added a vacancy, I came to know if my property was not vacant for 3 months, no, I would have earned 96. I am earning less, 72. Why? Because my property was vacant for 3 months. Hello, sir. That means I am not trying to hide anything from you. My actual rent is correct only. Please accept my actual rent. Got it, sir? Hello? Understood? Now the same logic you are going to apply for the last case. Come on, tell me in the last case. Last case, what is your expected rent, guys? What is your expected rent? 12 months expected rent is 78,000. Yes or no? Now tell me, what is your actual rent? For 10 months, actual rent is 72,000. Yes or no? Now tell me, is your actual rent lower than expected rent? Is your actual rent lower than expected rent? Reason might be vacancy. Reason might be. So now we are going to add vacancy also. To compare only. Getting my point? After adding vacancy, whatever figure will come, that is never going to become my GAV will be either expected rent or actual rent and no other amount. Getting my point? So tell me, what is the vacancy period? 2 months, no? So vacancy rent for 2 months will be 14,000. Now make the total. 86,400. See, if my property I would have let out for 12 months, no? If that 2 months vacancy was not there, then how much I would have earned? 86,400. More than your expectation. That means no, I am not trying to hide anything from you. My actual rent is correct and honestly I am showing you the entire rent. Getting my point? So in this case also what will be happening? The GAV amount will be 86,400 or the amount of actual rent which will be 72,000. The moment you will take 86,400 here, no, it is a blunder. Why it is a blunder? Because that 2 months vacancy rent 14,400 which you have not earned, you are going to pay tax on that also. Would you be interested in paying the tax on that income which you have not earned only? So don't show that as your income, no. What should be your income? Either actual rent or expected rent. Getting my point? Now tell me, in the same case, see, in the same case, did you understand this last case? So in my answer, what should I write here? 70. Everyone understood? Now tell me, if in the last case, if in this case, instead of actual rent being 78,000, what if it was 98,000? Now you tell me. What if the expected rent was not 78? What if it was 98? Ask yourself one question. Expected rent is 98,000. Actual rent is only 72,000. Actual rent is lower than expected rent. Actual rent is lower than. So now I will have to add vacancy also. So I added vacancy 14,400. How much amount I got? Come on, tell me. 86,400. This 86,400 is still lower than 98,400. No. That means vacancy, after adding vacancy also, see, your total is not coming more than our expectation. After adding vacancy also, your total is not coming more than our expectation. That means vacancy is not the reason for your actual rent to be less than the expectation. Reason is something else. Your actual rent will not be accepted. Your actual rent will not be accepted as GAV. Expected rent will become the GAV. What is the expected rent, guys? Expected rent is 98,000. Will you remember this? Hello, sir. See, in the ICAI, this vacancy stuff was not there, that we have solved additionally. Okay. What if there is no vacancy? Simple. AR or ER, whichever is higher. And what if there is a vacancy? Hello. What if there is a? You are supposed to focus on this part. Because here only the maximum students gets stuck. And you are supposed to be one of those maximum students, no? Or you will be an exception. Will you get stuck here? First thing, actual rent, there is a vacancy, huh? There is a vacancy. Give me the answer. Vacancy is there. Vacancy is there. Actual rent is equal to expected rent. Actual rent is more than expected rent. What will be GAV? Actual rent. What will be GAV? Actual rent. What if vacancy is there? Actual rent is less than expected rent. Take actual rent, add vacancy rent. This is a total. Just for the sake of comparison. This total is not going to become your GAV. Never, never. Understood? Actual rent plus vacancy rent, total. Now what if this total is equal to expected rent or more than expected rent? Still your actual rent will be taken as GAV. Hello, sir. What if actual rent plus vacancy rent, total you have done, still actual rent was lower. This total is also lower than the expected rent. Then forget about your actual rent. Forget about your expected rent will only be taken as GAV. That's it. Will you remember? Sure, sir. Pay attention now. See this. Actual rent, meaning I told, it is the rent for the period for which the property is actually let out during the, whether received or example. In this example, no, take the previous year. What is our previous year, guys? 25, 26. 25, 26. Okay. So in the previous year, 25, 26 from 1st April 2025 to 31st March 2026. The ownership is there. Yes or no? How many months ownership? How many months ownership? 12 months. Out of 12 months, property is let out for 12 months. No vacancy. This entire same example I have given you. Got it, sir? But written in a good manner over here. Good handwriting. Okay? No vacancy case, then you follow this. Vacancy case, then you follow this. By heart this part. By heart this part. No mistake should happen over here. Yes or no? Now pay attention. Next one. Next one. Come on. Can you see unrealized rent? Can you see unrealized rent? What is unrealized rent? Come on, tell me. Bad debt. Give me proper answer. It is that part of actual rent which was receivable but could not be recovered. Wait. Unrealized rent is a part of my actual rent only. Is a part of my which were receivable but could not be received, could not be recovered. It became bad debt. Understanding? Wait. See here. Let out period was 12 months. Property let out for how many months? It can be 10 months also, it can be 8 months also, yes or no? Hello? But let me take a very simple example. For example, I was the owner of the property from 1st April to 31st March. For the full ownership period, for full 12 months, I have let out the property. Is there any vacancy? No vacancy. So for 12 months, the property is let out. Okay. Now, out of this 12 months, no, 11 months rent is received. 11 months rent is, and 1 month rent is still receivable. Possible? Not possible. Okay. Tell me, actual rent will be for how many months? Huh? 12 months? Yes, sir. Don't lose your confidence. I will always try to put you in trouble like this. How much is the let out period, sir? How much is the let out period? So actual rent will be? So can I say in the actual rent you have included this rent also? In the actual rent you have included. So can I say 11 months rent which is received is taken as your actual rent? And 1 month receivable is also taken as your actual rent. Hello. Now this 1 month which was receivable, no, became unrealized. I went to tenant, give me this 1 month rent. Tenant said, Illa, no money. Bye. I said, give me the money. He said, I don't have money. I said, give me my money. You want money or you want bullet? I don't want anything. I ran away. Will I ask for rent? No. Tenant is a gangster. I came to know later on. So now this 1 month rent, will I ever go to ask? If I'll go, I'll not come back. No. So I know that now this 1 month rent, I'm not going to recover. I'm going to recover or not going to recover? Becoming bad debt. So now tell me, can I say in this actual rent only, this 1 month rent which was receivable, now could not be received, now could not be. So from my actual rent, I will remove this unrealized rent. From my actual rent, I will remove my. So from this, I will remove the unrealized rent. Now my actual rent. Now pay attention. Huh? For example, 20,000 per month was the rent. Let out period was 12 months. Rent received for how many months? 11 months. Rent receivable for how many months? And this rent receivable for 1 month becoming unrealized. Okay, no? So now with this information, what I am supposed to do? First of all, tell me actual rent. Actual rent is the rent for the period for which the property is. So can I say for 12 months the property was let out? For every month the rent was. So what is my actual rent? 2 lakh. Yes or no? Can I say out of this 2,40,000, 2,20,000 is received and 20,000 is still receivable? 20,000 is. So that 20,000 receivable is also my actual rent. 2,20,000 which is received is also my actual rent. So my actual rent is 2,40,000. Actual rent is for how many months? Right now. Now from this 2,40,000, from this 2,40,000, 1 month rent which I have shown in actual rent, 1 month rent which I have shown in my actual rent, I cannot receive. So what I will do? The government says that don't show it as a part of your actual rent, remove it. The law says that don't show it as a part of your actual rent, remove it from your actual rent. So what I did? Minus unrealized rent is how much? 1 month rent, 20,000, which I could not recover, amounting to 20,000, which I have already shown above. Yes or no? I will reduce. 2,20,000 will now be treated as my actual rent. And it is for how many months? It is for for 12 months. Instead of receiving 240, you received 220. This is not actual rent, will be always for the period for which the property is let out. How much period the property is let out? So actual rent is for 12 months only. But instead of getting 2,40,000, how much you received? 2,20,000. So take your actual rent 2,20,000, because out of 240, 20,000 became unrealized. Will you remember this? Hello sir. Now if you have taken actual rent for 12 months, now how much is this? 2,20,000. Instead of 240, now how much is this? Your expected rent for 12 months was 2 lakhs only. Then there will be no problem. Why? Because actual rent, if you take 240, still it is more than 2 lakhs. Hello. And if you take 220, still it is more than. So your actual rent will only become your GAV. Hello sir. Understanding or not? But what if expected rent for 12 months was what will you do now? Come on, tell me. If you see this, no, this is still higher than 230. GAV will be 240. Hello. But if you reduce unrealized rent from here, and actual rent you take 2,20,000 and not 240, meaning that actual rent minus unrealized rent is how much? 220. And you compare your actual rent minus unrealized rent 2,20,000 with your expected rent with your. Now if you compare this with your expected rent, what will happen? Is there any vacancy? This or this, whichever is, this will become your GAV. Are you getting the full benefit of your unrealized rent or only 10,000? Illogical. This is illogical. If you reduce your unrealized rent from your actual rent and take the balance actual rent and compare this actual rent with your GAV, theoretically it is correct. Theoretically it is. Your GAV will be how much? 2,30,000. You are going to get full marks. But this is illogical, because you are going to pay tax on 2,30,000. Bloody, you are having 2,20,000 income only. That means for entire 20,000 unrealized rent, you did not get deduction. Hello, only 10,000 benefit you got. Understanding? You should get the benefit of the entire 20,000 unrealized rent. No. So that is possible only if you don't reduce it here. See, don't reduce it here. Tell me how much is your actual rent? 2,40,000. Hello. Have you reduced any unrealized rent? Without reducing unrealized rent, take your actual rent. If there was no unrealized rent for full 12 months, how much I would have won? 240. which is more than your expectation only, no? So my GAV should be how much? But out of this 2,40,000 which I am earning, 20,000 is becoming unrealized. That I will reduce here. Hello? Now tell me how much is my final GAV? Don't you think that this is logical? Hence always reduce unrealized rent after comparing, after actual rent and expected rent. Don't reduce it from the actual rent directly. Got it, sir? Hello? One more example I am giving you. Come on, tell me. You are going to tell me now, huh? One example. Monthly rent is 30,000. How much is the monthly rent? Property let out. Let out period was 11 months again. Come on, tell me. 11 months. Okay. No, let out period, let's keep 12 months. And rent received for 10 months, rent receivable for 2 months. 2 months rent is receivable, okay, no? And 10 months rent received. Now from this information, this 2 months rent which was receivable, out of this 1 month rent becomes unrealized. Did you get the question? Hello? Okay, no? And expected rent here was 3,50,000. Expected rent for full 12 months, right? No? Expected rent for full 12 months was 3,50,000. Compute GAV. Come on. $3,20,000. Okay, one answer I am getting 3,20,000. Others 3,20,000 only. Okay, how much you are getting? 2 lakh? Okay, very good. Madam, 3,30,000. See, same class, same professor, teaching the same to all of you. But you are not giving me same answer, you all are giving me different answer. Wonderful. Hello, pay attention. See, how much is your expected rent for 12 months? It was, I have to compare this 3,50,000 with the actual rent, no? Now tell me, what is the let out period? So actual rent will be for? Okay, very good. Be very specific. See, whatever I have told you, no, that is Lakshman Rekha for you. That is Bible, that is Gita. Follow that only blindly, I am telling you. Don't try to deviate your mind. Examiner will try to confuse in so many things. Don't try to confuse. Sir had told me let out period is how much? 12 months. So actual rent is for 12 months. Monthly rent is 30 into 12. How much? Sir, was there any vacancy? Was there any vacancy? So this or this, whichever is, will become your GAV. So ER or AR, whichever is, 3,60,000 will become your GAV. Now minus unrealized rent receivable for how many months? Both the rent not, both the months rent not received, or only 1 month. So 1 month rent which could not be recovered, only that is unrealized rent. Getting my point? So how much was that? 30,000. How much is this? See, wait. Did we compare expected rent and actual rent? We get the GAV. From GAV we are reducing unrealized rent. This is my final GAV. Practically correct. Practically. I will get full marks also. I will get full marks also and logical also. And but instead of this, what did I say? Instead of this, other presentation is also possible. So let's do the other presentation. Come on, tell me. Expected rent 12 months. How much? 3,50,000. Hello sir. Actual rent for 12 months was how much? 3,60,000. Out of that, 1 month rent could not be recovered. See, in this 360, 2 month rent which is receivable is there. But out of that 2 months, 1 month rent is not received. That you reduce out of your actual rent. So how much? 30,000. Instead of reducing after GAV, you are reducing it from actual rent. Is it possible? Yes. Theoretically, this is also correct. So reduce this 30. How much you are getting? 3 lakh. Now tell me, is it for 12 months? Is it for 12 months? So for this 12 months, no, now instead of getting 360, you are getting how much? You should have got 360, but you are getting 330 for these 12 months. Getting my point? So now this is also for 12 months. This is also for 12 months. Tell me, GAV will be? What was your GAV earlier? And what is your GAV now? This is theoretically correct. This is theoretically correct. If you get this GAV also in your exam, no, you will get full marks. But logically the answer is wrong. See, how much full year rent you are getting? 360. You are supposed to get, yes or no? Out of that, if 30,000 becoming bad debt, how much should be taxable to you? So 330 gets taxable over here, no? Hello? This is more practical and logical, no? But if you don't follow this approach, you are following this approach. Instead of 330, you are paying tax on how much? You are paying tax on 20,000 more. You are getting benefit of only 10,000. Whereas your unrealized rent was 30,000. You should get the benefit of 30. You are getting a benefit of only 10,000. Is it logical? Would you like this thing? Or you will like pay tax on 3,30,000? Hello? So follow this, no? Practical also, will get full marks also and logical also. Hello? Will you? Sure, sir. See you tomorrow. Bye-bye.